Hello traders and welcome to another video review. Today is Wednesday, December 14th, 2022. Let's find out what is going on the Forex calendar. The key event of today is of course the FOMC interest rate decision, press conference and statement. So this data is scheduled for release as usual at 8 p.m. So nothing new here. Nevertheless, the other data released already. We have data from Japan, Tankan Large Manufacturers Index and Tankan Non-Manufacturers Index. For the fourth quarter, both of them beat the expectations and beat the previous reading, so good data from the Japan for the fourth quarter. The CPI from the UK data was lower than expected, 10.7% versus 10.9%. The previous reading was 11.1. Crude oil inventories are scheduled for release at 4:30, and of course then we have the FOMC interest rate decision. The market participants expect a hike from 4% to 4.50. So any hike that is less than this or no hike will be deeply surprising for the market participants. And at the end of the day, we got the GDP from the New Zealand for the third quarter. Market participants expect the GDP to jump to decrease from 1.7 to 0.9%. So today's analysis will be mainly about the US dollar, because we have plenty of the important data from the US, of course. So first we need to take a look at the US dollar to the Japanese yen. The US dollar to the Japanese yen 4-hour chart looks very bearish, as you can see, since this big top here, located around 152, 150, 196. The market has been moving down and down and down. Again, just recently we just touched the trend line here. As you can see, we keep moving lower, and it looks like the uptrend is now more or less completed. The market is trying to resume it, but so far no avail whatsoever. So this is the next technical support, which has not been tested yet. So let me just put it, there you go. And that's the technical support. Nevertheless, it's 131.95. Nevertheless, on the 4-hour chart, we still have something interesting for you guys. We got this low here, which will be again the technical support as well. So this will be the technical support. It's located at 133.64. So that's not bad, and not that far away apparently, because the local low was made at 130. Let me just take a look. 134.67. So this local low will of course act as a intraday technical support, 134.67. The highs are still at this very same level, around 137.87. so that's the high. As you can see, plenty of pin bars here, shooting star, and then big sell-off was made. So right now we have the short-term trend line as well. This is the short-term trend line here. Let me make it black, for example. So the black trend line is of course some sort of the short-term technical support for this market, and we have the horizontal technical resistance. This is of course the intraday technical resistance, 135.62. so that's the technical resistance. As you can see, the market jumped slightly towards the resistance. Now it is testing it, and maybe soon the market will continue the downtrend, because at the higher time frames the main trend right now is a downtrend simply. Momentum is negative, 39-40 points right now, so it's definitely below the level of 50. Bears have a bears have control over the market, so we should expect lower levels on the US dollar to Japanese yen. Please wait for the FOMC interest rate decision to see what levels are really important for the market, what levels are being played. That might be very interesting to keep an eye on. The other market we are going to take a look at is the euro dollar, of course. Why euro dollar? Because plenty of interesting things is going on this market. Let me just point out that we have a it's kind of of course, a trend line here that bears are trying to break, but so far there is no avail. So we got this nice nice trend line. Yesterdays I've been trying to provide some sort of the triangle pattern around here. Nevertheless, it was violated to the upside, so it's now invalidated. Simply that wasn't the pattern that market was looking at, and right now the level of 1.0595 is the technical that was technical resistance. Now it's technical support into the positive momentum, 62 points right now. We got nice breakout, and soon market should test this level and then break to the upside. The local high was made at 1.0674, so the 50% of the Fibonacci retracement had been definitely hit, and our target level at 1.0632, I guess, was hit as well. So right now we are consolidating the recent gains into the positive, of course, momentum. So it looks like the market wants to extend this movement higher. However, it trades very, very close to the trend line support. Maybe there is something going on here if the Fed will not deliver the desired, expected interest rate by the market participants. So this is how it looks on the 4-hour chart on the euro dollar. There's of course US dollar index. Let me just find out the US dollar index chart. There you go, 4-hour US dollar index chart. Let me just switch to the daily because that might be much more, there you go, much more clear. So after this high was made here at the level of 114.75, this is the high. The market has been moving down. Basically every rally has been used as a way to open more short positions. Every bounce was sold, every bounce was sold, every bounce was sold. And recently, to be honest, yesterday we've made a new local low. This local low was made yesterday at the level of 103.56. So it's very, very clear that the market is moving down right now. The trend right now is the downtrend, because this down movement is the biggest correction during the uptrend. So it's definitely some kind of a different cycle. Basically, let me just put the 100-day moving average, simple moving average. Let's say 100 days. Here you are. 100 days moving average is here, and it's definitely above the price, and the price is trending below this 100-day moving average. So the trend is down. You have plenty of the confirmations where is the trend and how it looks like. We got another technical support very close to the recent support, 103.30. So 39, sorry, 103.39. So that's the next target for the bears, and if this level will be violated, then there is of course one more level at 101.32. It all depends on the FOMC right now, on the interest rate decision, and what is even much more important here, on the market reaction on the Fed decision. All right, so please stay focused, stay vigilant around 8 p.m. today. because the market might be busy, might be trading violently, might be trading aggressively, especially on any pairs that are connected with the US dollar. As I said, US dollar index, euro dollar, US dollar to Japanese yen are the most susceptible forex pairs for the FOMC interest rate decision. So stay tuned and stay focused, and we will see how the market will react on the interest rate today at 8 p.m. So far, this is everything from me for now. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.